Welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, CPA, certified tax planner, and founder of Better Books. It is our goal here at Better Books to build your confidence around the tax code, give you the strategies, the ideas, the knowledge you need to help pay less money to Uncle Sam and the US government and keep more money in your accounts. We do that by a range of services. Specifically on our business side, we look to help you, the business owner and real estate investor, with tax planning. But here on the podcast, we are aiming to just equip you, whether you're a client or not, with the information you need to build that confidence. We know that taxes are a frustrating area for most Americans. It's a costly area for most Americans. So it's really our aim and our desire to help you eliminate those frustrations, eliminate the costliness by equipping you with information. However, we know that knowledge is not power, and applied knowledge is really the way that you can pay less money to the US government. And you apply that knowledge by teaming up with a tax planner, by really planning around taxes. If you have been following us, you know that our goal is not just to educate you, but to plan around the year, not just prepare your taxes, but meet with you regularly and give you insights on a regular basis so that you can make those confident decisions. We know that a lot of Americans lack confidence in their decisions, their financial decisions, their tax decisions. And so the goal here is to eliminate that lack of confidence and build your confidence by teaming up with you, partnering with you, advocating for you on decisions that do have large impacts on your financial and physical well-being. Because finances does not just affect your finances. Most Americans have felt stress around finances, and stress impacts your physical health, your mental health, your spiritual health. And so we want to eliminate that stress as well. So with all that being said, if you get any sort of value, if you know of anyone who can receive value and grow in confidence or eliminate that stress as a result of this conversation, please do us a favor and share it with a friend, and also leave us a 5-star rating and review. It really helps us grow in the popularity of the algorithm. And we all know that the algorithm can be used for good if we're pushing it in the right direction. And the right direction would be to give us a 5-star rating and review if you believe we're worthy of that. And hopefully by the end of this, you do. And also for those that are just listening, go ahead and subscribe to our YouTube channel. We have recently begun putting out more video content. We made some investments in our video content. We know that excellent and high quality video is something that we want and something that our listeners want. So if you're just listening, so long as you're not driving, then go ahead and check us out on YouTube. And again, subscribe and leave us a review there as well. And we're posting daily in that channel through shorts, and then weekly through use of our podcast. So you would be wise to subscribe and stay up to date on everything we're doing there. But today we're going to be talking about taxes, obviously, and specifically taxes being the biggest expense of your lifetime. And that's something that I've said before. I say it often. I say taxes are the biggest expense of your lifetime, but they don't need to be. And we often talk about ways that we can decrease taxes. But really today we're going to talk about why taxes are the biggest expense of our lifetime. I actually just got back from a tax planning conference in Detroit, Michigan. It was a great conference. It boosted my confidence in the services that we bring. It increased my knowledge on some of the strategies that are out there for real estate investors, business owners, high income earners to plan around taxes, to save on taxes, to invest in tax efficient industries. But I felt the impact of the topic that we're going to be covering today because I stayed at a hotel in Detroit, Michigan. And when I paid for that hotel, I looked at the receipt and it gave me the charge for staying at a hotel in Detroit, but it also gave me a charge of 3 or 4 line items. I think I kept the receipt. I could go back and reference it. But one of the line items was like city residence tax, a tax on staying at a hotel in the city. And then you pay a state of Michigan tax and a lodging tax. And there were probably 3 or 4 taxes that were on top of the actual service that I paid for, that is the residency in the hotel. And on 100 tab, it added $10 to $15 in just taxes alone. So that's about 10% of the bill was in taxes. And mind you, that's on top of taxes that I'm paying on business income, on top of taxes I'm paying on investment income. That is a tax that is tax on the expenditure that I'm paying out, a sales tax, a use tax, a residency tax on money that it is a tax deductible expense because it's a business travel, but it is money that is being taxed. The income that I generate is being taxed. And now the money that I'm spending is also being taxed. So it's just this whirlwind, this never-ending cycle, if you will, of taxes. And that's what brings me to the topic of conversation. Why are taxes the biggest expense of our lifetime, and what can you do about it? And so the reason taxes are the biggest expense of our lifetime is because, well, one, they make up a large percentage of our income-based expenses, right? If I pay a certain amount of rent, or if I pay a certain amount of mortgage, I can rely on that being a flat expense. I mean, if it's a mortgage at a fixed interest rate, I can rely on that being a flat expense for the life of the loan. If it's rent, I can rely on that being a flat expense for the life of the lease. But if it's taxes, it is a percentage of my income, right? We have a tax system here in the United States that based on our income, and you go up in the amount of taxes you pay based on the amount of money you make. So for starters, it's a big expense because at the federal level and most state levels, it's a percentage of your income. So the more money you make, the more taxes, the more percentage you're going to give in taxes. But not just that, but think about all of the taxes that we pay, right? There's federal tax, there's state tax, there's local tax, there's county tax, there's sales tax, there's use tax, there's capital gains tax, there's social security tax, there's Medicare tax, there's payroll tax, there's unemployment tax. And it's like the federal income tax is one thing, state income tax is one thing, but then they're taxing you on just about any other thing you can imagine. Federal programs, how do you think they generate money for Social Security? They tax you. How do they generate money for Medicare? They tax you. So when it's all said and done, there's at least 15 different categories that you're going to be paying taxes in. Okay. And federal income tax, I mentioned that the highest tax bracket here in the US under current tax law is 37%. And then if you add to that the state income tax, like in a state of California where I've lived, or a state in Minnesota where I currently live, or a state of Massachusetts where I have lived, that ranges in anywhere from 5% to 6% to 13% if you're in the state of California. So if you're paying 37% at the federal level and 13% at the state level, 37 plus 13 equals 50% of your income at that highest tax bracket is being taxed. And then you pay sales tax and use tax and local tax and county tax and Medicare tax and Social Security tax and unemployment tax and payroll tax. And all of a sudden, your 100% worth of income that you got, the $25,000 sale that you made, has now been halved as a result of federal and state taxes. And then it gets cut another 10% because of sales tax and use tax and lease tax, every other tax you can imagine. And so you're working with 40% of your income. And I guarantee you guys that you don't understand how much you're paying in tax. If you went through every single dollar that you made and every single dollar that you spent, there's a good chance that you'd be paying definitely more than 20%, more than 30%, and arguably for most people in that high income tax bracket, you're paying more than 50% of the money that you've made in taxes. And so we have this system. We're told that we have this graduated tax system where we pay based on the income we make, but something like sales tax is based on the money that we spend. And so if we're spending money, we're going to be paying taxes on that. If we're investing money and we've generated a large amount of capital gains, we're going to be paying taxes on that money as well. And sometimes that money has already been taxed, right? If I'm making a salary and I get money and then I take that money and invest it, then that money goes up in value. I pay taxes on the increase in value of the already taxed dollars that I made. And I'm not saying that we shouldn't have any taxes. I am saying that we should reconsider the way that we do taxes. I mean, there's large data that will show that the less we pay in taxes, the better it is for our economy, right? Ronald Reagan implemented a tax cut in the 1980s that had significant positive impacts on our economy in that time. And it was largely in part because they were tax cuts and people thought he was crazy for doing so. And yet he did it and the economy flourished because of it. There was revival, they called it in those days. And then you look back to 2017, President Donald Trump came into office, had a large tax overhaul. And from 2017 up to 2020, 2021, we had immense amount of economic growth. And it was in large part because there were tax cuts. There was bonus depreciation. There was qualified business income deduction. There was in 2021, I guess, was Joe Biden, but they allowed you to deduct 100% of your meals expenses on a business level. And so tax policy has a large impact on the success or failure of our economy. And so I don't advise presidents or public officials on what tax policy should be, but I think there's a lot of data that would show that if we have a friendlier tax environment for the business owner, for the consumer, for the service person, well, then our economy will flourish. And if our national debt is any sign of what we need in this country, it is likely a flourishing economy. We need people investing in the economy. And so, I mean, that's a bit of a rabbit trail, but I bring it back to the fact that we often say that taxes are the biggest expense of our lifetime. Why are they the biggest expense of lifetime? Because we have so many different categories that we're paying taxes on. We're paying taxes at the federal level. We're paying taxes at the state level for most people. We're paying taxes at a local and county level for some people. We're paying taxes on the use of our products and services. Some states will charge a use tax. We're paying taxes on the payroll that we pay. We're paying taxes on the salary that we make. We're paying unemployment tax for the federally funded unemployment services. We're paying taxes on the Social Security for the federally funded Social Security tax. We're paying taxes on Medicare for the federally funded Medicare tax. So it's not just one level of tax that we're paying. There's a whole category of taxes that we pay. And so I would not want to just leave you guys feeling doom and gloom about your tax situation. Like there's nothing we can do about this because we pay taxes at a wide variety of categories. I have here 10 categories that I wrote down and I went through most of them. I mean, for the real estate investors out there, you're also paying property taxes. You pay taxes on the utilities that you buy. Look at the utility bill that you have for next month. It will show a tax and a fee that you have paid because you're using gas, because you're using electricity. And a lot of these companies just pass this on to the consumer. So when we're all said and done, there are so many categories that we're paying taxes on. So what can we do about it? Is it all doom and gloom? The answer is no, by far, no way. I know I have clients who don't pay any tax. I have clients who make $500,000 and they pay 10% taxes. Like that is possible, but what do these clients do? They plan. They create a plan with a qualified tax advisor, with a certified tax planner, and they're able to consider areas that they can invest. They're able to consider deductions that they can take, credits they can take around the year, right? I'm meeting with clients this week and next week to discuss their third quarter tax planning. What can we do to save on tax? And it's not just contributing to a retirement account, because guess what? You contribute to a retirement account and then you pay taxes on the withdrawal of that retirement. And so it's this comprehensive tax plan that you guys can do. You can plan ahead, right? Benjamin Franklin said, if you fail to plan, you can plan to fail. If you fail to plan around taxes, you can plan to fail in the treatment of your tax life. You can plan to fail in your financial well-being when it comes to taxes, right? When we consider finances and our financial health, some of us consider just like saving for retirement or saving for our kids' college account. But it's so much more than that. And a lot of it has to do around taxes. And so what can you do to help eliminate the cost of taxes, the frustrations that you have, the headaches that you have, the stress that you have around money? You can plan around taxes. We had a client recently who came to us. He has about $300,000 worth of flipping income. Had he not come to us, he'd be paying more than 50% of that in taxes because his entity wasn't set up properly. So he's paying taxes on the type of entity he has. He's paying federal taxes. He's paying Colorado state taxes. And so when it's all said and done, he's about 50% dollars in the hole when it comes to taxes. Mind you, he's not saving for taxes. Many people are just putting a certain amount that they think is going to be the right amount aside for taxes, but in large part, it ends up being way too little. And you have to go into debt and pay interest and all these crazy things to the IRS because you didn't plan, right? So we can plan. We can plan through strategies, but we can also plan through putting certain money aside. And it's this idea that if you live off of 60% of your income, you're going to make it work at 60% of the income. There's a great study out there on psychology. I can't remember what the name of the study is, but it basically compares the way that we approach finances to the way that we approach toothpaste of all things. So when you use your toothpaste, when you first start out with that toothpaste, you're very liberal, I will say, with the amount of toothpaste you put on the toothbrush. You're not worried about it. You're just putting a lot on and brushing your teeth. But as that toothpaste starts to dwindle and you start to have less and less in the tube, you're going to squeeze it a lot harder to get what you can out of it until you're twisting the thing up and squeezing for every last inch and every last centimeter of that toothpaste because you want everything that toothpaste has for you. You want to use every last bit. The same thing goes with your money. Whether you keep 100% of your money in your checking account or 60% of your money in your checking account, you're going to do what you can with that amount of money. If you have 100%, you're going to go and spend it very extravagantly. You're going to be very, again, liberal and less conservative with the way that you use your money. But if you have 60% in it, you're going to be very conscious about it. And regardless, what that last $100 that you have, whether you started with 100% of your money or 60% of your money, you're going to squeeze every last bit out of it. You're going to count your pennies, if you will. You're going to start couponing. Like, there is psychology to this. We use what's available to us. The point being that if you plan for taxes and you automatically say, I'm going to put this percentage of money away in this savings account, it likely won't inhibit you. You might not be able to buy some of those luxurious goods that you had planned for or that you would have if you had the full 100%, but you know what you're going to do? You're going to be able to afford taxes, or you're going to have a lot more sitting aside because you planned around taxes, tax bill wasn't that high, and now you have extra money left over. So one thing you can do when it comes to taxes is plan ahead. Plan ahead through strategies and plan ahead through being diligent with your money, putting money aside for the tax category. Number two, all right, we've talked about the implications of our elected officials and what they do to control the tax code and the way that our money is taxed, right? I talked about Ronald Reagan, and then I talked about Donald Trump, and then I talked about Joe Biden. So what can you do from a tax perspective or to help pay less in tax? You can vote accordingly. You can vote, right? We have this great beauty in the United States of America where the government actually works for us when it's working the way it should be, right? It is a republic, a constitutional republic where our elected officials, who we have a say in them getting into office, they now have to work according to and legislate according to what they said they were going to do and what we voted them to do, voted them into office to do, right? So vote accordingly. There is an election year in 2024, whether it's the presidential election or an election that you have at the local level. You have the power to vote for someone who is going to be friendly or unfriendly from a tax perspective. Are they more in line to get greater amounts of federally funded organizations out there that they're going to have to make money for? Well, if their goal is to have the government running a lot of programs that are going to benefit their constituents, unemployment, Social Security, Medicare, well, where are they going to get that money? They're going to tax the people for it. Right? That's what we're doing. When Social Security was passed, it is a federally funded retirement program. How do you fund that? You fund it through taxes. So one side is largely government oriented. We want the government to provide the services to the people. The people will pay for it and the government will produce it. And so that is one side of the aisle. You can vote for that if you want, but trust me when I say this, your tax dollars will likely not decrease when you vote for someone who is big on federally funded programs or even state funded programs, right? So the other side would be, do we want the government providing this? No. So we're going to put it back in the hands of the people. How are we going to put it in the hands of the people? We're going to offer them friendly tax environments. We're going to offer the real estate investors who provide housing for our citizens. We're going to offer them tax credits and tax incentives to invest. We're going to offer the home builders tax incentives to invest. We're going to offer the tech executives tax incentives to get us in a more favorable place for the future, right? People incentivize the investment in a technology company because they trust that the technology company is going to offer jobs, going to put the United States of America in a competitive advantage in the sector of technology, which is going to benefit their people. So the second thing that you can do to help you pay less in tax is vote. Vote for the person that's going to be friendlier to you from a tax perspective. Who's friendlier to the business owner? Who's friendlier to the real estate investor? Who's friendlier to the single mom with 3 kids? Who's friendlier to the loving husband who's married and has 3 kids? There are answers to that, and you need to get the answers by getting the information. I'll tell you right now that in 2017, we had a large tax overhaul because of the Republican-controlled Congress and Senate and presidency, right? And so if that, and again, going back to Ronald Reagan, he also passed a largely favorable tax environment for the American people, which he was criticized for. And so there's also going to be a lot of criticism for the way that you vote, but just know that you have a say in how these things operate, and you can do a lot with your vote and with the people around you that you encourage to vote as well. All right, so we can plan accordingly, we can vote accordingly, and then we can hire a professional. This is the third thing that you can do to help pay less in tax, right? Who knows all the categories of these taxes? Most Americans don't even know all the ways that they're taxed. I talked about the invoice that I received from the casino hotel that I was at in Detroit, okay? I didn't know when I signed up to buy a room at this conference that I was going to be taxed at the level that I was. And I'm an accountant. So do you think that you, as the business owner, as the committed husband or wife who is taking care of her family and his business and his investments, do you have time to consider all of the tax categories and the best ways to pay less in tax? No. And you shouldn't have to worry about it either. You should be working with a professional and ensuring that that professional is properly educated and that they have the time capacity to meet with you on a regular basis to plan ahead, and that they're proactively offering strategies that you can use to pay less in tax, right? So many people are trying to go at this on their own, and that is crazy. I'm telling you, when we look to lose weight or get into physical shape, what do? Do we try to do it all on our own? No, we hire a nutritionist, we hire a personal trainer, we are held accountable by other people, we make our calendar align with our goals. These are things that we're doing for other areas of our life. Why wouldn't we do them for the area of our finances, the most expensive area of our finances, taxes? Hire a professional. We do it for doctors, we do it for physical trainers, we do it for education, right? We hire a professor, we hire a professional to teach our kids in college. And Lord help us for the way that some of those professors are teaching our kids, but it's true. We look to professionals to help us out in areas that we need help. And the tax world is no exception. And arguably, because taxes are the most costly line item of our lifetime, and because there's so many categories that we need to be aware of and consider, we should be doing it more so. We should be proactively planning. We should be looking for those professionals. And last but not least, we should be voting accordingly, according to what is best for our business, for our people, for our descendants, and we should make sure our voice is heard. And then, if you want to take that a step further, we should also be reaching out to these people that we do elect and making sure that we are making our points heard, right? So as business owners, as real estate investors, as loving husbands and wives and parents, we should make sure our people our elected officials are enacting legislation that benefits us and the community around us. Man, that is a whirlwind of an episode, but I trust it was helpful. Remember, taxes are the biggest expense of our lifetime. It's because there's so many categories, we don't even know what to do, but there is something we can do about it. We can plan ahead, we can vote ahead, and we can hire a professional. If you got any sort of value out of this, I ask you to share it with a friend and leave us a review. If you are looking to check point number 3 off as hiring a professional, and check number 1 of planning ahead and you're not sure where to look, reach out to us. Fill out the Calendly link on our website and in the show notes, and we would love to see if we have a fit for you. We are currently on a wait list, but we're working through that wait list, and we'd be happy to get you involved and get you on that list because we want to help you. We want to make sure that you're prepared and planning ahead, because there is no reason that you should be accepting the large cost that taxes are to your bottom line. This has been the Know Your Numbers REI podcast. My name is Chris McCormack. I thank you for tuning in. Until next time, God bless you and keep moving forward.